Hey everyone, welcome back to Corporate Decoder, the place where we break down the financial fine print and where it looks like Clene Incorporated might need a serious caffeine boost to handle their latest numbers. Let's dive into their Q3 2025 report and see if they are brewing up success or just a sour deal. First off, the balance sheet shows they had about $8 million in cash and cash equivalents at the end of September 2025. That might sound like a lot, but when you look at their bills, things get interesting. They have over $34 million in total liabilities. That means their debt is significantly higher than their cash on hand, which is a classic red flag. Looking at the liabilities side, they have over $34 million in total liabilities. That is a lot of money owed. On the flip side, their total assets are a little over $22 million. This means their liabilities are higher than their assets, indicating a negative net worth. This is not ideal for any company. And speaking of negative net worth, their total stockholders deficit is over $12 million. This means that if they were to sell off everything they own, they still would not have enough to pay off all their debts. This is a serious concern and definitely something to keep an eye on. Now let's talk about how much money they actually made, or in this case, lost. Their total revenue for the 9 months ending the 30th of September 2025 was just over $123,000. That is incredibly low for a company of this size. For the same period in 2024, their revenue was $251,000, so revenue dropped by more than half. This is a worrying trend, and with that low revenue, it is no surprise that their loss from operations is huge. They lost over $15 million in the first 9 months of 2025. That is a significant chunk of cash. When all is said and done, their net loss for the first 9 months of 2025 was nearly $17 million. For the same period in 2024, that loss was over $25 million. So while they are still losing a lot of money, they are losing less than last year. That is a small silver lining. Let's look at where the cash is actually going. Their cash flow from operations shows they used over $13 million in the first 9 months of 2025. This is consistent with their losses. They are burning through cash at a rapid rate, which is expected for a company in the pharmaceutical development stage. In terms of investing activities, they barely spent any money on assets in 2025. Almost nothing. In 2024, they actually had a significant cash inflow from investing activities, mainly from selling some securities. This suggests they might have been liquidating assets to cover their expenses. Financing activities show a big inflow of cash in 2025, over $9 million. This comes from selling more stock and issuing new debt. In 2024, they actually used cash from financing activities, meaning they paid more on debt than they brought in. This indicates a shift in strategy, likely needing to raise more capital to stay afloat. Clene Incorporated is working on developing new medicines, especially for brain diseases like ALS, Mississippi, and Parkinson's. They also have some dietary supplements. It sounds like a promising field, but very expensive. Now, this next part is critical. The report explicitly states that there are substantial doubts about the company's ability to continue as a going concern. This means that based on their current cash situation and losses, they might not be able to keep operating for much longer without getting more money. They have plans to raise funds through selling more stock, getting loans, and other deals, but there is no guarantee any of that will work out. This is the biggest red flag in the entire report. Looking at other information, they mentioned they are not aware of any current material pending legal matters. That is good news, as legal battles can be incredibly costly. Regarding risks, their biggest challenges are still the same ones they've had before. They need more money to keep going. Their drug candidates might not get approved, and they depend on other companies to help with their research. Nothing new here, just the same old story for a struggling biotech company. And finally, the exhibit section is mostly just paperwork and legal agreements. Nothing really stands out here for the everyday investor. So, what is the story here? Clene Incorporated is in a very precarious financial position. They are losing a lot of money, have very little cash compared to their debts, and their revenue is minuscule. While they are working on important medical research, the immediate future looks very uncertain. They are essentially betting on future funding and successful drug development to survive. It is a high-risk, high-reward situation, and right now the risk seems very high. They need to secure significant funding very soon, or their ability to continue operations as a going concern will be in serious jeopardy. Alright, that is our breakdown of Clene Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.